Are you looking to start to become an angel investor in a startup, or have you started angel investing recently? Today I'm going to talk about all the red flags angel investors should look for when they're investing in startups. Are you ready? Let's begin. Hi guys, my name is Avishai. I'm an angel investor, and today I'm going to talk to you about the red flags that flash for me and cause me to steer away from a certain investment when I see them. So one of the first flags I want to dive into right away is the founding team and the focus. When I invest in a startup, one of the most important things for me is to see a founding team that has left their jobs and decided that they're going all in on their startup. When I see co-founders that have another business or co-founders that have a full-time job, which is a very cushy one in a sense, that have a high salary and great benefits, I try to ask the co-founding team, what's the deal? Why are you not 100% in the startup? And sometimes one of the founders is 100% and another one isn't, and I'll direct the question to actually the one who is 100%. I'm going to ask them, why are you building a co-founding team with people who are not all in just like you? So that's kind of right off the bat a red flag that specifically for me is like a huge, I would say, issue that for me it can cause me to completely give up on even thinking about investing in a startup. I want to see people who are 100% committed and doing only that. It's one thing to, say that, well, it's a transition period and there's a plan and we're about to do it in the next 2 to 4 weeks, that it might be something that I can, get along with. But when somebody says to me, yeah, when we'll finish raising the round, or when we reach a product in beta, those milestones don't work for me. So red flag, if people are not 100% invested in their own startup with their own time and 100% all in, red flag. They have to be 100% their startup, because if you're investing money in somebody who's not 100%, that money is probably not coming back to you. So moving on to the second red flag. And that second red flag for me is when there are exaggerations in the deck and there are projections that are very specific and have a lot of information, especially when it's a pre-seed stage startup or a seed stage startup that is far from the position to put these projections. And I don't really understand, why would they want to put in the deck something that would just cause, I would say, me to start poking holes in their deck and poking holes in their plan. I know as an angel investor that I'm investing in mostly idea stage startups with most of the time a impressive team. So why put all kinds of projections that will just make me think that the team might be too optimistic and they don't know what they're going into. So that's for me in terms of the second red flag. When the deck has exaggerated projections or too optimistic projections, I try to steer away. The third red flag for me as an angel investor is when founders email me or LinkedIn me or Twitter DM me and say, hey, I want you to invest in my startup. And when I ask them back, well, why? Why do you want me to invest in your startup? Why did you choose me? Well, if you look at most of my DMs and my emails, there's most of the time no answer on the other end. And when I mean no answer, I don't mean they don't reply back. They just reply generic answers. And for me, that's not an answer. That's not a way to sway me to even listen. And if somebody really wants me in their startup, they're going to do the background check. They're going to do some checking around with people that know me. They're going to do research before they approach me. You're about to have somebody join your journey for years to come. If you're not doing proper due diligence, I'm basically very skeptical of how long you have in your mindset and how much time you're going to invest in the startup. If you're really going to put everything you got in something and you're looking at a 10-year horizon, you're looking very, very thoroughly. You are conducting due diligence on who are the angel investors you're approaching, and you have a rationale why you're approaching them. So, third red flag would be if I get approached by someone and they want my money and they have no other reason besides that I am an angel investor. So that's another red flag. Another red flag is when the plan of why we need X amount of money doesn't fit the amount requested. So there are situations where founders either ask too little or too much money in according to the plan they presented. And one of the things that I hate is that when a startup founder says to me, well, this amount of money will allow us to reach until this point in time. And to be honest, I don't really care about runways. As an angel investor, I want to try to beat the odds. And if I'm investing a certain amount of money, I want to know what milestones are we going to reach with that money, and less how much time is going to be left for the company. And I want to know what kind of achievements we're going to reach in this round until the next round. And I don't really want to hear about the day-to-day spend of the money. Talk to me in milestones and achievements. Don't talk to me in timelines and day-to-day tasks. So that's for me another red flag when founders pitch me. Another red flag when founders pitch me is when they do a lot of name dropping. Now, angel investing sometimes is a very cooperative space and sometimes it's a competitive space. I don't necessarily want to have my name dropped in other meetings, just like I don't want to hear other names dropped in my meetings unless there has been some due diligence and somebody knows that I know the other people in a friendly manner. I think that it's a cheap tactic to throw inside a meeting that person A has said this about us, or person B has showed interest in investing us. Look, if somebody invested in you or is, sent you an LOI, great. And they allowed you to share it, even better. But if somebody just that I know met you and said that it's interesting, don't name drop. I am going to call them. I am going to text them. And you'd be surprised how sometimes you will leave as a startup founder a meeting with one angel with a perception of how the meeting went, and you're going to name drop that angel everywhere, and then a different angel is going to call them up, and you're going to basically burn yourself because in that conversation there's going to be a whole different reality explained to one another that you don't necessarily know of. So just take into account, name dropping is a double-edged sword and it can come back to haunt you. So beware with the name dropping. If somebody's doing too many name drops, for me, very big red flag. Another red flag for me is when a deck is full with advisors that I don't necessarily understand their value. And when I see a deck that is already promising a bunch of people shares in the company and the kind of rationale behind why they're in the company doesn't fit, I usually get that feeling that the founders might not be confident enough, or they've been pressured by somebody to join the company. I like when a deck shows me that there is a group of advisors, that group of advisors has a way to move the needle in a sense. I don't like when there are advisors that have no ability to move the needle, especially when I see advisors that are writing in their LinkedIn that they're advisors in 15 different companies in the same time. Those are the kind of advisors that I ask myself, why would you add an advisor who has another 14 different companies or 15 different companies? Why do you think they'll have time specifically for you? So that's another thing that I take into account. So I hope until now you kind of understand that most of these red flags are things that you do have to, pop the hood of the car to see them. It's not things that you're necessarily going to feel in the meeting right away. These are things that sometimes you have to check after the fact, like if somebody's showing you a deck with a projection or a deck with advisors or name dropping, you're going to have to do a lot of things after the meeting to kind of see how red is that flag, if there is a reason for concern or not. Okay, moving on. Another red flag is when a startup founder basically tells me that there is a clear path for an exit. And I haven't actually encountered startup founders that were really sure about how many years it will exactly take and who are we going to be sold to. And you wouldn't believe this sometimes happens from second time founders, and it actually happens with founders who have actually done an exit in the past, which causes me to kind of pause and ponder, is this the kind of founder that on the one hand is really good and I can trust that they're going to do an amazing job, but on the other hand might be too cocky and they have overconfidence in their ability to do another startup again and sell it all over again just because they had one exit. So that for me is another red flag. And usually I like to meet founders who have a sense of humbleness, even if they had success in the past. So that's in relation to red flags. I hope you guys enjoyed this video and found it useful. If you did, hit that like button. And if you like this kind of content about angel investing, startups, stocks, crypto, companies in the public markets, don't forget to hit subscribe and the bell for notifications so you can get alerted when one of these videos comes out. Thanks for watching. See you next time.